Hello, guys. Welcome back to Stacking Stocks, and many thanks for tuning in today. Let's hit the ground running. We've had to deal with a lot of fun when it comes to AMC, but we were recently rewarded for our conviction when one of the main sources of the fund, CNBC, revealed a little too much. What did they say that makes that much of a difference? Melissa Lee, who was a news anchor on CNBC, revealed an illegal naked short selling that had been going on, and she revealed it live on air. Wow. Apparently, there are a lot of short sellers out there that have been borrowing stock that they didn't have. But then the broadcast has since been edited to exclude that part that was mentioned or commented on naked short sellers. Why did they do that? Does it mean that it was actually true? Fortunately for investors, the internet never forgets. Video footage of the interview can still be found scattered across the internet, and many people consider Melissa a hero even within the Reddit community. There have been numerous memes created about Melissa being part of the ape army. From what we observed, investors were inspired by her to keep holding. In a nutshell, investors are thanking Melissa for revealing illegal naked short selling in the stock market. Now let's get started on AMC stock. How is it connected to what Melissa Lee revealed? Shortly after, there was a very negative sentiment amongst investors when it came to AMC's share price, as many short-term contracts they were holding expired. Some of the investors even had their option contracts expire an hour early because of the brokerage they were using. We think that that's why some investors opt to use Webull over Robinhood, because Robinhood does things like this where you don't have control over your positions. We've seen them do this before with GameStop, where they didn't allow investors to buy and they only gave them the option to sell. When AMC does Moon and the short squeeze happens, you should expect them to pull something similar. So if you don't have a Webull account, you might want to make one now, but then that depends on what you prefer as an investor. What Melissa Lee said live on CNBC will work in your favor in the near future. We've been hungry for more positive news catalysts ever since Adam Aron, the CEO of AMC, created more headlines of wanting to issue more shares for the company. If you can recall, AMC Entertainment Holdings asked shareholders for the authority to issue up to 25 million shares after selling stock into a dramatic upswell of its share price. AMC previously planned to ask shareholders for approval to issue up to 500 million fresh shares. That's roughly as many as are currently in circulation, but canceled those plans after an uproar from investors. That shows how much influence investors have over companies they invest in. The issuing of more shares will most likely not happen, according to Aron, since his suggestion was met with severe backlash from the shareholders. What will happen, though, is that they'll ask shareholders to agree to a smaller number, and they would only be able to sell those shares in 2022. So we don't have to worry about that for the time being. What we do have to worry about is the Ortex data that was recently released regarding AMC shares. According to Ortex, there was a net 28.4 million shares returned, with most of them likely to have been bought because of a T+2 settlement along with a 13.81% free float. The returned shares were 31.58 million. Borrowed shares were 2.65 million, and the borrowed change was 28.93 million. What investors found the most concerning was the borrowed share data, as these numbers would insinuate that shorters are recovering more than we expected. A Reddit post on Wall Street Bets broke down the Ortex data and explained the actual amount of shares the shorts have covered and how AMC could potentially reach a price target of over $2,000 per share. And there's even more news on these short numbers. Ortex reported a net decrease in borrowed shares of about 29 million. This caused some concern that shorts may be covering more than we thought without seeing the corresponding price action that we were expecting. However, Ortex tracks borrowed shares that are returned, not necessarily borrowed shares that were sold short, brought back, and then returned. The managing director of S3 Partners has his own proprietary tracking system, and they do track actual shorted shares returned. From what we established, there was a net return of 1.4 million shorted shares, 1.6% of the total 88.2 million shares sold short. And what does this mean? And what should investors expect? It means the hedge funds only actually covered 1.4 million shares and decided to return another 27.6 million shares that they had borrowed but not yet sold short, likely because they finally realized what a terrible idea it is to short AMC. We've all probably heard about hedge funds letting go of their positions after unsuccessfully trying to short AMC. Why not just give up? Well, that's up to them. Let's do some math. Let's say short sellers covered 1.6% of their short position, and their share price went up 83%. If you assume the same rate of price increase covered going forward, then shorts fully covering their position would correspond to a percentage increase of 5,188% over a closing price of $47.91. That equals $2,485.60 per share. This price target of over $2,000 per share is certainly possible. AMC stock has been the fastest growing meme stock so far this year. But is it possible for a movie theater operator like AMC to have its stock valued at such stratospheric levels? AMC Entertainment recently hit the headlines after a 20% leap in its stock price in 5 trading days as institutional firms, including JP Morgan, Fidelity, and BlackRock, poured some $36 million into the company's coffers by purchasing its shares on August 24, 2021. So will the AMC stock price see a reversal, or is it set for more gains? Let's find out. Do you know that AMC is now the world's largest movie exhibition company with around 1,000 theaters and 11,000 screens across the globe? The company has witnessed a bullish spiral with an overall 20-fold increase in its share price since the start of 2021, becoming a meme stock, a stock whose price is driven by bullish mentions on social media. But what is the AMC price prediction for the rest of 2021? Although the pandemic hit the entertainment industry hard, the company, on the verge of becoming the classic penny stock a year ago, posted a strong second 2021 quarter, announcing it would soon open up to cryptocurrencies as a way of payment for its customers. The stock share price of AMC has constantly been changing. In early January 2021, the AMC share price was standing at $1.98. But the AMC stock price record was broken on June 2nd, with the stock starting trading at $62.55. Can you notice the price fluctuation? Since then, the AMC stock price has been following the classic meme cycle. Generally, as a meme stock company releases new information, a bullish spiral starts on its stock price, followed by a profit-making one. If you're wondering if AMC Entertainment is a good investment in 2021, or whether the stock will expand the rally for further gains, or is going to pull out of the bullish spiral, we'll look at AMC stock predictions and the forecast to determine what investors could expect, and take note of the data we've gathered from different sources. The general tone of those offerings in AMC price prediction is somewhat mixed. CNN predicts it will be $16 at most in a year and says it could be as low as $1. The median rating is $5, down roughly 86% from the current value. Out of 9 analysts polled by the broadcaster, 6 are saying to hold, and 3 are recommending selling stock in AMC. Wallet Investor says AMC will be stable at around $50 in a year. On the other hand, Coin Price Forecast says it could be $39.96 by the end of 2021 and should be around $62.04 by the end of 2022. Finally, Gov.Capital's AMC prediction suggests the stock should be around $135.82 by the end of 2022 and around $401.19 by the end of 2025. As you can see, the predictions and forecasts vary from one source to another. As an investor, you should majorly rely on your own research. We, as Stacking Stocks, only seek to guide you on your research journey. Well, that's the end of today's session. Remember to like, share, and subscribe. Take care, and we'll see you next time right here on Stacking Stocks.